Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and we have talked about auto loans and all these crazy problems before, and we especially talked about the auto-backed securities not that long ago, which are humorous to say the least if you don't take into consideration the vast insanity of the whole thing, and kind of brings us like into a blast from the past. It reminds us a little bit of the 2006, 2007 era, but looking at this article from Bloomberg Markets, it says, subprime new car buyers going missing from U.S. showrooms. Demand has been steady among shoppers with better credit. March sales pace may have slipped to the slowest in 7 months. And going into the article a little bit, it says rising interest rates and new vehicle prices are squeezing shoppers with shaky credit and tight budgets out of the market. In the first 2 months of this year, sales were flat among the highest rated borrowers, while deliveries to those with subprime scores slumped 9%, according to J.D. Power. And John, just can you make some sense of this whole situation here?
Well, what's happening is subprime is under 620 in FICO score, which is your credit score. That, of course, in this great land, if you don't have a credit score, you can't get anywhere almost in this land without it. So that's, yeah.
Tell me about it.
Yeah. It's not easy, is it, to not be on the grid?
Yeah. If you try to escape the credit system, if you try to escape dealing with the debt involved in a credit card, then you can't book hotel tickets. You can't book, plane tickets. You have a hard time getting cell phone plans. You have a hard time renting. Getting a car, anything like that. It just builds up, and it's absolutely insane.
Well, so to come back to the article of the auto sales, of course, we talked about this a lot before, Josh, where we talked about the actually auto sales. With the creation of the auto-backed securities, where they take all these car loans off of the balance sheets of the banks and then hide them, and then create these they put all these in entities, and then in the entities they put them into the auto-backed security. So it's tranches of several different ones, and then as we said before, they might put in a couple of good auto loans at the top to make it look really good for the pension funds to get them, and then of course it all comes down. Auto loans are getting insane. I just recently had to buy a car because my wife wanted a new car, and our cars were starting to get bad, and that's how bad. These cars are quite newer cars, and they're starting to get bad at a very fast pace now. It's planned obsolescence. You should look that up.
They're made practically completely out of plastic these days, and there's no incentive for good quality because the free market is completely gone. There's just big monopolies by government and regulation.
Not only that, and it's of course the monetary system, the rise of inflation. The companies has to make more money in order to pay their investors, because the inflation is higher. Well, yeah, there you go there as well, where they have to cut down on different things in the car, and then of course you get a worse product out the other end, and that's what you get when you have this centralized planning. Now there's a lot of companies that are struggling here, and in another article they talk about how certain companies are trying to really get rid of their bad debt. They're trying to cut down on a lot of it. They're gone down. One company went down 70% to 55% of subprime, trying to cut their losses basically. Because subprime, there's a 50% chance in subprime that loan will default. And the bank knows it. They just are greedy and want that money from the customer, which is paying a high interest rate in order to borrow that money, which also brings us back to the interest rate apartheid, where if you don't have a credit score, well, you're going to have to pay massive amounts of money in order to even have a car loan in the first place. Now, I'm just going to show you one more stat, which is an interesting stat. It shows 2015, 16, and 17 outstanding car auto loans in the United States. And if you take a look here, it's risen from 987 billion in quarter 4 2015 to quarter 4 2017. It's 1.12 trillion. And what is happening, I'll explain it quickly, is that the cars are getting more expensive, of course, because of inflation. It's built out of commodities. That's what a car is. But unfortunately, when you drive it around, you do a lot of stuff, but it drops tremendously in value very fast. So it's not a good asset to hold at all unless you actually really need it. And it's funny how the banks, like if you ask, when you go to the bank and you do certain things, but then go and look at your balance sheet, and then they list your car as an asset. I just laugh about that. It's really just Robert Kiyosaki calls it a doodad, which is, you know, a fun thing that you have because you can afford it. Actually, a lot of people are buying tons of people are buying cars that they can't afford. And then, of course, another thing that played in with this whole, you know, race in auto loans and so on was the cheap gas prices. Yeah. Got to remember that the crash since 2009, how the gas prices went down tremendously, you know, from $120 a barrel on oil down to almost 29 at one point. So gas prices have dropped tremendously, but now they're on the way up again. And all these, that's probably one of the causes of the starting to default auto loans here, which is a massive problem. $1.12 trillion is not a little amount of money.
Well, we'll see. The carbon taxes bring the gas prices way back up, and then there's a lack of demand as well in that market. But you're talking about the depreciating asset that is a car. Anyone that has ever owned a car knows that it's a depreciating asset, unless you're that guy that bought unless you're the guy that bought two of the only remaining certain kinds of Lamborghinis and then crashed one in order to make the other one more expensive. I mean, unless you're crazy like that guy and have, you know, millions and millions, if not more, to throw around, then yeah, it's a depreciating asset. It's absurd for people to use cars as an asset. I mean, you drive it a few blocks after you buy it and it's already depreciated incredibly.
Well, you can get car title loans now, which is insane. Just go to here in Canada. I was driving, talking about this in an earlier video, I think, but I was driving up McPhillips, which is a road here, one of the main roads up to where I live. And what was interesting is it says car title loans on one of the, of course, small little dealership that, you know, sells cash. They sell to the people with the least amount of money. And car title loan, that's just, let me explain quickly what the insanity of a car title loan is. So you could take out a line of credit on your car, which is a depreciating asset. That doesn't make sense whatsoever, Josh. But of course, when we're in so much debt, we got to get more debt. So we got to find out ways to, you know, suck more credit into the system in order to keep it alive.
Of course, it's more debt servitude. We all know how that goes. But John, what does this have? How does this affect the overall market? What does this say about the overall market going forward, considering, you know, so many things that it's like deja vu all over again, the continuation of these, you know, auto-backed securities, etc. I feel like we're seeing like a collateralized debt obligation version for, you know, autos, the auto industry. Can you go into what impact this all has on the overall market and what we can expect from it?
Yeah, well, what's going to happen is it's a part of the market. It's a part of people's debt, household debt, which is a huge growing problem everywhere in the world today. Like, look at private debt to GDP in a lot of countries.
Trillions of dollars?
Yeah, especially the big countries. The countries that are big amounts of taxes, they're the ones that have the most amount of debt. And that's where you see a lot of people are getting into a lot of more debt. You see, of course, people back in 2009, which was the low point when people really struggled, you saw only about 7% was subprime. Then you had the top in 2014, which was 12%, and now it's dropped down to 10%. So you're seeing the credit cycle again, because the insanity of these car loans is, you know, now you're looking at almost 10 years. 10-year car loan. We're looking at a freaking mortgage here, Josh, to get a car in these days. And I remember, you know, Americans coming over to Norway back in the day, because Norway was very expensive, and they said, we can't believe your car costs as much as a house in our country. And that's where we're heading, of course, today with inflation and everything. It's just a natural, and Norway was a heavily inflated currency, the Norwegian krona. So that's what you saw. But also what happened when gas was cheap, all these people went out and bought this huge cars. I just looking at the roads here, Josh, driving around, you see big SUVs, tons of them now. And that's another thing, you know, now they're about the gas guzzlers, but just wait along the line with the moving gas prices up again and all this happening. And of course, the credit crunch that's coming upon people. the delinquency of these loans are just gonna skyrocket through the air, and now it being 1.12 trillion dollars. That's a huge problem in the economy when 1.12 trillion dollars just evaporates. You're gonna see a lot of problems. This is not just auto debt; it's every single household debt, and of course every other debt around the world is gonna collapse in on itself, because that's every system based on this just does this. It always gets into unsustainable level, and it never decreases the amount of debt, as you can see, right?
Yeah, well, I mean, I even know of some people who are multi-millionaires who still they're buying cheap cars now because no one can really afford to buy expensive cars, especially in this kind of economy. It's next to impossible. And as I've often mentioned, the fundamentals are off the table due to the level of manipulation in the markets as well as in the monetary system. So you can't put a date on a crash, but you know it's going to come. But John, with that said, can you go into how far off are we from a major bubble burst of epic proportions? We've talked a bit about the auto bubble in the past. What do you think?
Well, I think we're getting closer and closer every day, especially with all the things that I went through out in our video here, talking about all these different problems that are hitting us. I think we're going to see some serious issues coming down the line very quickly here. And the economy, like everything about the economy, we're so indebted everywhere that people are going to be like, well, what can I cut? What can I cut? And auto loans they would probably cut their auto. Actually, I think maybe auto loans will be better off than than mortgages, because a lot of people will just end up living in their cars. That's what you've seen. Remember, we did an article on California and the housing problems in San Francisco and other cities around there, where people started to live in their cars to survive. So maybe actually we would see a boost. A boost in car ownership because of the terrible conditions with the massive amounts of house prices just skyrocketing everywhere. Maybe we'll see the car loans going up again. Who knows?
Stay away
from insane. Yeah.
Stay away from the loans. Just be self-sustainable. Buy used cars, folks. At this point in time, I mean, really, just don't go out and buy a super expensive car. You'll probably buy it for a lot less in a few years once a bubble bursts. Just saying. I mean, it's probably it's like kind of going into Detroit after the bubble burst, the housing bubble, and just buying a house for super cheap. Still not a good idea altogether, because you don't want to be in servitude to the banking system. You don't want to be in servitude to the government in any way. You need to be self-sustainable and focus on being able to be financially responsible and understand these things so you can make sure that you and your family are safe in the inevitable event of the stock market crashes, bond bubbles, auto bubbles, housing bubbles, the monetary system, the greatest bubble of all mankind, the fiat system.
Debt bubble, that's what it is. It's massive debt bubble. It's like, it's blowing so big that it's probably like 10 times bigger than the Earth. If you actually created paper out of all that debt and created another planet, you could create another planet that would probably be the size of Jupiter with all this debt.
Yeah, and of course, financial responsibility, the hallmark of freedom itself is responsibility. We have to be able to be educated and be the change we wish to see, instead of depending on these entities that depend on our dependence, which is really a dangerous territory to be brought into, because, I mean, the more subservient, the better for them, the worse for us. We as individuals need to understand these things so we can be self-sustainable and responsible. So with that said, food, water, shelter, self-defense, you're not gathering things for the toughest guy on the block. The solutions I always bring to you at the end of every single video: gold, silver, cryptocurrencies. If there's fundamental value there, do your own due diligence. Don't get into anything just because some guy said something. Just because we say something doesn't mean you shouldn't do your own due diligence. Of course you should. That's what it all comes down to. Just be careful for the mainstream medias, because there are profit motives involved in what we see in the mainstream media, and it could just turn out with more debt subservience from the populace if you listen to everything that Kramer guy says or whatever,
Well, if you listen to all the commercials all the time out there, the car commercials, the the bank commercials, all of them are pushing you, trying to get you to buy a nicer house, buy bigger things, because when you get a little bit more money, oh yeah, now you can afford more debt. It's so fantastic, instead of cutting down on that and actually having more money.
We all remember the loan commercials from 2006, 2007. You get a loan, and we know how that turned out. So, John, bottom line for this report?
Bottom line is this is going to collapse again. It's just another bubble within the big bubble, which is the massive debt bubble that we have created on the planet here, because it's just the end game of any fiat currency. It's a stoppage of the value of currency, which will just end up with suddenly, you have everybody's getting into all this debt. There's, of course, some countries that didn't have a middle class yet, that you see in China. The middle class has just skyrocketed there. But with the middle class, Josh, what increased substantially in China? Well, debt, of course. So that's what you're seeing. There might be some minor bubbles yet to push forward in Asia, with India and China coming online and creating a middle class there too. But here in our side of in the Western countries, we are really struggling because we are at the end of the debt bubble, and we are gonna start to suffer very soon because it's becoming extremely unsustainable.
Yeah, and you mentioned China. A populace in debt is a populace in servitude. China is a great example of the vast servitude to the state and the banking system. And of course, if they shove you down a bottomless pit of debt, you are forced to ask for a ladder up from the government and the banking system, which puts you in perfect servitude exactly where they want you. So don't let it happen, good people. It's up to you as individuals to make sure you're not falling straight down that bottomless pit.
Sorry, I was just thinking about something, Josh. In China, they could do with their social credit is they could force you, if your social credit is lower, they would, if you go and buy into a whole bunch of debt, will increase your social credit, so then you can go travel again, you could go places, but you need to get in a whole bunch of debt. That's a great idea for our communist Chinese morons over there running the whole centralized system. Is do that for your society so you can control your people more, because what's greater than putting everybody in debt? It's so much fun for society.
Yeah, that sesame credit is really insane, especially when it comes to what they can shut down in your everyday life if you don't have a good social
scam.
Absolutely. It's a trap. Run. Anyway, thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here, WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized and censored by YouTube as the ADL comes in and flags all of our content as hate speech. Also, check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also find us at steemit.com at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in Steem, the cryptocurrency. And also find us at the Red Pill Expo, which we have a reference link for below in the description and the comments as well. Hosted by G. Edward Griffin, amazing speakers coming out to speak this year. Don't miss it. It's in Spokane, Washington, June 21st to 23rd. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
Bye.